objective. You will figure out ways to do it. There are challenges. Cost of service is very high. Today, whether I'm serving a account which I pay 4% or an account which has zero balance, the cost is the same. Right? The cost of people, the cost of service, the cost of transaction is the same. So there are requirements that we need to do. How do we innovate to reduce our cost of operations? But for Federal Bank, in our home market in Kerala, we are obviously a material player, and we have a large share of both the bank and the to be banked. So we are working on that. We have what we call the financial literacy counseling centers. Out of the state's 24, we have 19 owned by us, or 21. We have 25, I think, is the state's number of counseling centers. So we are virtually in every district, in every location. We have ourselves, our branches, plus the business correspondents and the trainers who are going about. We've adopted Chhattisgarh. I heard you. Did you say you're from that part, sir? No, you're from Rajasthan. We have adopted Chhattisgarh. We have adopted some villages of Western Maharashtra, where we are again doing development. Partly it's mandatory, partly it's our commitment to the society. So, for example, in this whole Jan Dhan Yojana program, we have added over a little over 100,000 accounts. That's our contribution to the 7 crore, 5 crore that is opened so far. But happily, we're finding these are accounts that are carrying balances. We've already built over 50 crore of balances through these accounts. And now us and other banks have to figure out how to increase the transaction volume in this, how to get the subsidy disbursed into this account, and therefore make it more active and more regular banking account. So these accounts will graduate into the next stage. But if you take India's 10-year, 15-year view, the two areas that will grow materially given the country's demography and the country's need, one would be mortgages, right, home loans. In my view, in 2020, it will be 40 trillion. That will be the 40 lakh crores, will be the mortgage book of Indian banking industry, which is equal to almost today's total banking industry advances. So, one side of the story is going to be 40 trillion in home loans. Now, you all know home loan is a 7 to 10 year to 15 year tenor product. Savings is transactional product. So, there will be a mismatch in funding. So, unless you get a lot of sticky balances, banks will struggle to fund. So, savings account growth is important, low cost deposit growth is important, balances that will stay with banks is important. So, you need to get more accounts. So, you have to spread your risk by many accounts rather than just a few accounts. So, there is need. Take the other end of the spectrum. One is the home loan. The other end of the spectrum is infrastructure investment. By 2020, the infrastructure investment in India will be like 50 trillion, 50 lakh crores. 50 trillion. Where will you find the money for that? And long-term funding is crucial. So, there are sources of funding for the country have to dramatically improve in passage of time. Otherwise, there are going to be issues of all the aspiration and no funding capability. So, more sources of money have to come in. And as young man like him gets smarter, you're going to find people are not going to put money in savings and current. Digital will catch on. People will figure it out. This is not meaningful. So, you'll have to find the more creamier layer will go into investments. So, the more graduate. So, it's like an evolution. It's a ladder process. Somebody will enter, somebody will exit. Somebody will enter, somebody will exit. It's quite fascinating. Sorry, I keep talking.
Why do you think that car loans are priced cheaper than the education loan prices?
See, these are all headlines newspapers put and all of you fall for it. I don't believe in all this. Education loan is not expensive. Including subsidy, it's cheaper. For the needy. This is all, this media likes to write and everybody falls for it. Because it's a good headline statement. No, education loan is cheaper, costlier than auto loan. All of you are saying it. Don't believe it. For the needy, it is cheaper. Both are cheaper. And in an auto loan, the moment you underperform your auto performance, you get penalized and the car taken away. In an education loan, even if you underperform, I can't take your education away. So, but I'm not making light of it, but I'm just saying as young students, I don't want all of you to become carried away by negative media publicity. please learn to distill the truth. India is a country where anybody can put it. It is a fact. I mean, I am very sensitive to what you're saying. I'm not dismissing what you're saying, but we just get, media loves to write, Arnab in 9 o'clock show will make the country look as though it's a piece of nonsense. I'm sorry, I belong to the category. Some of you may think I'm an idiot saying something different, but I don't believe in being negative. Right? The truth is, if he is a good student and is repaying and is the needy category, there's subsidy. Right? The money is affordable, available. Home loan or auto loan, which he borrows at 12-13%, there are again two issues. Commercial. See, remember, everything becomes, businesses are conducted for commercial gains. So if they see the Mr. X is borrowing and repaying, he'll get it cheaper. If he borrows and doesn't repay, he'll go into CIBIL, he'll become negative, he'll never get a loan again. So these are now evolving, but arbitrage is never permanent. Today a student loan for some student who is needy, good, maybe slightly higher, but it gets corrected. So it's not a design, it may be a practice.
As a former development banker, do we keep seeing that MSMEs, they will low labor intensive and high employment generative nature and all that. But still, one of the major challenge, what I've seen when I was with the APSFC is that the requisite amount of financial assistance is not happening. Number one. Number two, though the government of India was very kind enough, to capitalize commercial banks, especially public sector banks and cooperative banks, they have not done anything to capitalize the SFCs. The requirement was hardly about 6%.
The second part, I don't have a good answer on the capitalization, so I won't venture into answering that. The first one, on the MSME funding, I, both in my banking role and in the CII role, I get often asked this question and cursed also, saying you bankers are useless, you will only give money to the people who are good, and the people who need the money, you will remove the umbrella. Right? I am sure all of you complain about bankers. I can tell you, at least as federal and generally in the industry now, the sensitivity around needing to fund good MSME is very high. You talk to any banker, we are all of the view that this is a remarkable opportunity and we must participate. For example, Federal Bank grew last year 36% in our MSME outstandings, and we are running almost at a similar rate this year, slightly lower. So the essentially means that we are willing to fund that segment. And there are schemes now, the CGTMSE scheme, up to 1 crore collateral is not required. Above 1 crore, which means you are of a particular size, you have to bring in some collateral. See, if there is no equity by the borrower, then he has little stake in the game. So there has to be equity in by the borrower, I believe that. For the most needy, in the low ticket, there are now schemes that are available through insurance and things. And now there are so many collateral based lending, and India being a huge gold ownership country, the reason gold loans have taken off in the manner it has, because gold is effectively acting as a collateral for these small businessmen. So I think the thing that banks don't lend to small business is not universally true. I'm admitting that it may be in pockets. That is experience led. I mean, if I give 100 rupees or 100,000 rupees to somebody, and out of every 10, 3 don't pay, then it's a problem. So you need something to hold back. But with the increasing in the credit bureaus, acceptance of various kinds of collaterals, with CGTMSE kind of schemes, banks giving it greater focus, I think it's slowly reducing, is what I would say.
Federal Bank has given loan limit to the Kingfisher around 80 crores, and it has got back only 10 crores around. So can something measurements can be taken before declaring as a willful default?
Means, are you saying have we taken measures or can it be taken?
From a banking perspective, can something be done?
Sure. See, when it's not fair to discuss any particular account, I'll give you a more generic answer. All lending, particularly big ticket lending, you often lend on the strength of the financials the collateral they offer, and of course, a track record that exists. For a brand like the one you mentioned or anything, we would have explored one or two or three of these and then lent. But there are decisions that go wrong, or the client situation changes, and this client is under that category. So very elaborate procedures of trying to recover happen in a bona fide client. I'm not talking of this client. In a bona fide client, the bank is required to make the best effort possible to recover. At the end of the day, you've given money, so you have to collect back. If the client is recalcitrant, is unwilling to cooperate, is being difficult, then the bank has to resort to measures that are extreme. So in this particular client, all banks are going full throttle to try and recover. But there are natural, see, that's the unfortunate part of our legal system in the country. Even the criminal and the defendant both have the opportunity recourse to the same legal system, and both find loopholes in the legal system to support their cause. So in the particular case that you mentioned, many banks went after. One Calcutta court has given a stay order in favor of the client. So the declaration of willful defaulter that some banks have done have become, at this point in time, not void. So that is more the legal remedies, that legal process that has to be corrected or improved in the country. But the short point to your question is, all methods that are legally acceptable are being evaluated to recover dues. And usually it's a very elaborate process before you tag somebody as a willful defaulter. Not in this case, in any case, because you're required to go through a series of steps, demonstrably prove that the money has actually gone into wrong purposes, has been diverted. He has the ability to pay, but he has moved money elsewhere. Then you show cause him, show cause the client. The client has to come and make an explanation. And then ultimately, after a very elaborate process, you say, yes, this is a account in default. And then you publish it. So usually you don't rush to doing that. This particular case is a high profile case. So it's in the media every day. And
for the roadmap which is taken by Federal Bank for digitalization.
I will only say 2 years back, he doesn't know, I think, I was sitting in the banking award at Europe, and Shyam received the banking award for the best bank in the country.
He's my spokesperson. Yes, please. We genuinely believe it's a remarkable opportunity, and it's something that you cannot run away from. So we are all banks, and we are very heavily invested in it. Our journey in the digital is along 3 layers. One is the internal, which is the operational convenience as if using technology. The second is the customer should see great utilization and value in such a way that it makes his engagement easier. And the third is it has to have a productivity gain so that the cost of serving segments like the financial inclusion segment drops. So there are 3 sort of vectors to it, which is what we pursue. The visible one for a customer is one that helps his life. The point that Mr. Misra referred to is when we won the Banking Innovation Award for the best technology product, our team felt one of the biggest things that client wants is a normal middle class Indian wants his passbook regularly updated. Right? If you ask your father or grandfather or uncle, invariably you may not even go to a bank, but your previous generation would go to the bank at least 3 times a month to note down in the passbook. It's like a joy. Whether your balances went up by 100 rupees or something happened, you like to see that. So we said, with the emergence of mobile as a platform, don't bother to come. The passbook is served on your mobile 24/7. You can't do transactions on it, but your passbook, electronic passbook, gets updated. And the other thing is, if you notice, all of us as individuals, when we get a passbook, one pencil mark will be, this was given to my uncle for 50 rupees. Or you make a note. We said you can do it on the phone. So basically we said we will do a digital offering of a passbook. So the electronic passbook, which we call Fedbook, was launched. While that product itself is a good one, we are learning from that is that the more customer convenient things that are offered in a manner that is intuitive, easy for the client to use, it becomes. Today if you buy an iPhone, nobody gives you a manual. Today you give the iPhone to a 10-year-old child, he will start playing on it, right? It's intuitive. You don't need a manual to do that exercise. 10 years back or 15 years back when you bought a Microsoft computer, you need a manual, you need to see then this, that. Now nobody opens manuals, correct? So which means what? It's intuitive. You touch, whatever, rub, it works. Same thing we are trying to do in banking. We want to introduce everything on the digital platform. At the same time, continue to do the manual practices, because we, particularly banks like us, we have clients from all segments. We have a youngster like you, we'll have your grandfather also as our client. And both are important to us. Some grandfathers are very tech savvy, but some are not. Like my father today is better at computers than I am. After retirement, he learned from his grandchild. I'm sure many of you face that. They're 80 years because they're Skyping their grandchild in London or New York. They are better in technology than you who are working or studying. So these are, the situation you point out is very real. Partly it's economic, partly it's political. So on the politics of it, people are pushing back, particularly in the state of both Telangana and Andhra. When the new governments came into power, they were very generous in their commitments to offer waivers, which is a very big challenge. So the regulators have stepped in and have not entirely allowed the waivers, and I think it's a commercially right thing to do. The NPA partially is created by the environment, partially by wrong lending. The wrong lending is your own problem. You have to face it. Right? If you do something wrong, you will face the price for it. The environment, which is why all this lobbying for new government, policy improvement, rationalization of policies, enablement of various infra gains, the rollout of various initiatives will all help. So you have to live through the problem, and like I said in my early part, some execute better to come out ahead, and this is where I'll do a little plug for my bank. We came out better, right? So that means you have to be grounded and rooted and kill yourself. So there's no solution to the problem, ma'am.
Do you see this phenomenon of increasing customer expectations and decreasing customer loyalty? Do you see that, and if so, how do you go about it?
I totally agree with you. It's not only customer, employees, right? This young group, by the time they turn 60, they would have worked in 7 jobs. And some of them would have quit a job and become an entrepreneur. See, my colleagues, 3 of them, amongst each of them, they would have worked for 35 years in the same bank. Am I right? Sajan must be 30, Vasu must be 30, Jose must be 33, 34, or 32. All my colleagues have worked, and that's true for our bank. But you take, we have had 4,000 youngsters in the last 4 years. If you separate the bank, we have about 11,000 employees. About 7,000 were with us for 20, 30 years. Attrition rate is only death. The below 4,000, below 4 years vintage, 4,000 people, attrition rate is 5%. So the blended is about 2%, but this is 5%. Because they have opportunities. They are impatient, and rightfully so. I'm not faulting anybody. And same thing with customer. See, when there's choice and there's competition, both expectation go up, loyalty comes down. The only solution to that is up your game. As Federal Bank or as an employer and as a bank, the only solution is your quality of what we do has to be fascinating, the other man sticks with you. But there is nothing more, otherwise the cost of retention increases. Right? You can't pay